Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He takes a look at the once hot lumber market, oil, and the bouncy ride equities took during the week. Mark Leibovit, publisher of the Leibovit VR newsletters, tells us if he feels the markets are in correction mode, whether there's a connection between astrology and the markets, and whether trading is a science or an art. Ed Steer from EdSteerGoldandSilver.com digs deep into the precious metals market. Is he surprised gold and silver haven't been doing better this past month? He also comments on a shortage of physical silver. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at Charts by Ross. Welcome back to the show, Ross.
Good to be back with you, Jim. A
pretty bumpy week on the markets. What's the story there?
Yeah, pretty dramatic. We go through these cycles. We finished off July with the talk of the town being the silver market going all the way to $49 and gold having this big rally. So those gave up ground very quickly in the first part of August and have now gone through this consolidation. And it became the turn of the equity markets to do the same thing. So a week ago we had all these exhaustion signals as far as the Dow, the S&P, the NASDAQ, all had these massive relative strength overbought readings that lasted for 3 or 4 days. Hadn't seen anything like that since we went into the January-February top. The advanced decline was having trouble making new highs. So, we were set up for the hard decline. That happened at the end, just the previous week here. And by Monday, got to that first oversold level from which you get a bounce. And I think there's probably more to be had on the downside here. But within this whole concept, it's probably more of a topping motion. So if we were to rally back to the levels that we saw midweek, maybe a shade higher than that, that would be a great selling opportunity. And I think you still want to be looking into mid-October before you get a really good opportunity on the long side. You got the stocks like Tesla and Apple, which really became excessive from a fundamental perspective based upon current or even the projected earnings for the next year or so. So corrections are the name of the game.
Gold and silver, are they going to continue to be darlings of the market even though they've had a pullback?
Well, so there's some key support levels in here right now. You probably got a $1,900 level as far as gold is concerned. It's triangulating after that August the 6th high. And if we look at the silver market, that has got support in here as well. At the 25 and 3/4 level, resistance at 28. And as of midweek, we had a nice little bounce in silver, got up to about 27.60. If that level is not exceeded, then for me, the odds are still pointing that we get down towards maybe the $23 level as part of the backing and filling process that's going on here. Usually when you get excesses as much as that we saw back in June, July, it takes a while to run that course. And this one, unless it really popped to life here in the next week or so, the best path, I think, still is to the downside. If we look at the miners, they really haven't done much this week, just a backing and filling there. So no leadership on the upside. So no real guidance as far as that's concerned. You know, the one item that really has come off here was the lumber market. We had 7 limit down days as far as the November contract is concerned, and it's now given back half of the whole rally. So big consolidation due there, probably good for a decent bounce. Pretty thin market for people to trade, but, you know, for those that are there, it might be an opportunity. The other one that really has been so quiet for the last number of months has been the crude oil market. It had been stuck with resistance up in the $42 to $43 range. Slid off pretty badly this week, getting down. We've got a sequential buy setup, so that's 9 consecutive days with closes below 4 days earlier. Historically, about 3/4 of those end up with a pretty good bounce. So I think you can end up seeing, and we're seeing it also in the XOP and the XEG here as far as Canada is concerned on the ETFs of the stocks. So probably good for a decent bounce. Gold or the oil market back maybe to the $40.5 range. Short-term traders might take a look at that. But seasonally, this is like the equity market. We were in a period of weakness, so you've got to be nimble if you're going to be looking at the long side. Ideally, I'd like to see one of my capitulation lows as we get into the middle of October, and we'll have patience and wait for that.
The Canadian dollar, we always compare it to the U.S. dollar, so how's the Canuck buck and the greenback doing?
Well, the Canadian dollar has held in here reasonably well. We're 75.90-ish as we finished off the week. Support is really important support here at 75.5, and you know, it's come off its highs. I guess we've had about 6 days maybe of just easing back down, holding up relatively well compared to what we're seeing over in the oil market, but more along the lines of what we're seeing in the agricultural market. If we look at the DBA, the agricultural ETF there, it's playing up near to its highs, around 14.85, and we're looking to be a seller of that when it gets up into the 15.40-ish range. That would be a good overhead resistance for the DBA. And if we get that, and Canadian is just as it's been now, sort of in a small trading range between 75.5 and 76.5. If the DBA gets up to resistance and starts to roll, I'd be pretty concerned about the Canadian dollar at that point. So keep that in mind as we go through the next week or two. I'm just say getting to the point where commodities may start to have a bit more of an override as far as the currency is concerned.
Ross, thank you so much for the update.
Always a pleasure, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Mark Leibovit, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to This Week in Money, Mark.
Glad to be here. Thanks for having me.
Mark, do you have a special offer for our listeners?
We do. It is at vrtrader.com. That's V as in Victor, R as in Robert, vrtrader.com. And when you pick any one of our newsletters. There's a 50% discount offer if you enter the promo code in the promo code box, 2020 half off. That's 2020 HALFOFF. Thank you.
Mark, for our new listeners, can you give us a bit of your extensive media background?
Sure. It's gone back for many years, but it all started, back in Chicago when I was working for a couple brokerage firms where, a lot of reporters would contact me for, quotations and so forth, and one thing led to another. Ultimately, regular guest on the original financial news network in the I say late 70s before CNBC took them over. And then one day I get a phone call from Louis Rukeyser from the Wall Street Week television program in Owings Mills, Maryland, that he'd like for me to appear on the show and ultimately to become an elf, one of the 10 elves on that show, which probably many listeners may not even be aware even existed. The show was on, I think, from 1972 to just about 1995 or so, or 1999 maybe. I'm off on the dates, but Lou had passed away, so the show did end. But in any event, along the ways, I got lucky and became what was known as a market monitor guest on the PBS television show, Nightly Business Report, with my good friend Paul Kangas, who also unfortunately has passed away. So times have changed, and doing a lot. Had a little radio show for a while, Jim, on the Genesis network, Genesis Communications Network, and now I'm lucky I'm with House Street, so having fun doing it.
I recall Lou having one of the great chins in broadcasting along with Jay Leno.
Yeah, he had a nice lock of hair too, right?
Exactly.
He was a remarkable guy in more ways than one. He wrote all his own copy. He was a journalist, came from a journalism background. His father was a journalist as well. I think his brother, Bill Rukeyser, if I'm not mistaken, owned one of the big financial magazines, and I'm trying to think the name of it off the top of my head. It was a very famous financial magazine too. So he came from a journalistic background, but he was very entertaining and witty. I had the pleasure of having dinner with him a couple times and speaking to him often, and it was a real honor and treat because he really was a leader in the financial broadcast industry. Maybe the first out there, with the show starting in, I believe, like 1972. So everything we see today in financial television owes a great debt of gratitude to Lou Rukeyser.
As Ross Clark just told us before our segment here, the U.S. stock markets were pretty bumpy during the week. Are the stock markets in correction mode? I
believe so. Our models have indicated that this would be the time where we would get a shakeout, and here we are. And as far as my current interpretation of the cycles and my own annual forecast model, which, by the way, is available as a little bit of a sales pitch on our website. We put that out at the beginning of every year, and it really was remarkable this year. I mean, to make a forecast of a trading pattern for an index 12 months in advance. We've been doing it since 1987, 1988, and not every year is 100%, but we've had some pretty good calls, and this year has been so far pretty accurate, calling for, remember now this is put out in January, calling for a big low in mid-March, which timed in perfectly with the COVID crisis sell-off, and seemed to know something was coming. In fact, at the World Outlook Conference with Michael Campbell's World Outlook Conference, February 6th and 7th, when I was speaking, I pointed out that's exactly what our model said. Be careful, we're going to sell off here in the next month or so, perhaps dramatically, and sure enough, not knowing what the trigger would be, that's exactly what happened. But the model is currently bearish, and it said the market might hold up to the end of August, which it did, and it's pretty choppy here between now and the end of the year. So for those who want real specific details of the pattern, they should go to our website and sign up for our VR Forecaster model.
Are we likely to see further all-time highs in the U.S. stock markets anytime soon?
I have to try to be optimistic because over time the market does seem to always come back to new highs, no matter how bad the event. We've seen a lot of crises over the decades. I've experienced a few myself, and I would have to answer yes. I'm not saying it's going to happen immediately. Maybe if there's a Trump victory, as most are hoping will be the case, at least in my crowd, that the market could surge to new highs. But, there's going to be volatility if he's not in and the market sells off. We've learned over the decades that no matter who sits in the White House, regardless of your political persuasion, though we have some pretty eccentric left thoughts out there about where our economy should go and where our country, referring to the U.S., is headed. But over time, stocks always seem to rally and have huge sell-offs, again, no matter who's sitting in the White House. So over time, the market goes up. So whether we have a surge to new highs and then a bad year or so, I'm sure it'll come back again. I think inflation, money printing, and general patterns of growth. There's always new industries, new technology, money flowing into new opportunities. So I have to be an optimist. So if you're a young person in the market and you've got a 20, 30-year time frame and you're planning for retirement, the market's the best place to be.
How does the U.S. dollar look both short-term and long-term?
Not quite sure about the long-term, Jim. Short-term, our models are a little bullish here. We've had a big sell-off, and we're due for a technical rally, and maybe even more than that. So we'll see how it unfolds here. We're long the U.S. dollar in our trading ETF plan, and we're up a little bit in it. So let's see if it continues. The downside for that, of course, is that it seems to negatively affect commodities, precious metals, and so forth. So as a result, I'm probably answering a question you haven't asked yet, but I'd be a little cautious on commodities and precious metals, and then until the dollar straightens out here to the downside, as I guess the commodity bulls would like to see. So right now, bullish on the dollar. Short term and long term, we're just going to have to wait and see. My charts don't go out that far.
What do you see ahead for gold, and will there be opportunities to perhaps snap up some bargain price gold miners?
Yes, I'm very bullish overall. Our work overall says, overall between, I guess, whatever time frame we want to put that on, the end of September, October forward, I would, be long the precious metals. I think there's more. The cycle's not over yet. Could carry into February of next year. Short term, I'm a little concerned as I am with the stock market, and then particularly if the dollar rallies. So I think I'd be looking for more of a correction in gold. I think too many people got too bullish, ran up too far too fast. But even saying that, we were keeping a small core position anyway, because I could be wrong, and the overall patterns are intermediate bullish, though short term a little bearish. So rather than be out and perhaps be wrong, we'd rather keep a little position there. So we are holding some gold shares and gold, but we're not in there with both feet, and I think there'll be another opportunity, hopefully, in the next 30 to 45 days.
What do you see ahead for silver?
Silver is sort of tough because it always seems to disappoint. Over the years, has huge moves, everybody gets excited, and then it dies on the vine. And I'm just going to play this along with gold as long as the gold cycles are positive. So I would say I'm constructive into the first quarter of next year. Let's see where it goes. On the downside here, I think there's some pretty good support around that $20 to $21 level if we get more of a sell-off here. And beyond that, I really don't have an upside target. I know many forecasters have come out with some pretty big numbers. I tend to be a little bit more cautious with regard to silver, again, because it's really, again, so many times disappointed us. So I'd rather be a gold holder than a silver holder, but we'll trade it as we see the opportunity. Some gold stocks, to me, make a lot more sense than the silver stocks.
How is the gold-silver ratio looking?
Well, it got to an extreme, which is what got everybody really bullish on silver, and sure enough, it took off. I'm a little neutral on the ratio right here, Jim. It's not at an extreme reading as it was, so I'd rather just keep it at that. I don't have much of opinion. I don't trade based on the ratio. I trade on what the cycles are saying, what sentiment is doing, what the volume patterns are showing in the metals. And, basically the charts that I'm looking at, look like little toppy patterns to me here in the metals and the index shares, and many just ran, straight up there, and then everybody got excited. So to me, a little bit of a tops in place here. That's why we're a little cautious.
What's the latest on crude?
Just funny you brought that up, because it was been negative, as you know, for the last 3 weeks, and suddenly it started to show a little bit of positive action in our work. So we actually went long an index related to oil companies today, and we'll see if we're right on that. It looks like it might have bottomed out here for a trade. Overall, I guess I would consider myself more of a bull than a bear, and I don't have a specific target for you at the moment, but on a short-term basis, we're just long here, and we'll see how far the rally carries. If we can get through $45, $47 a barrel, then maybe we're headed to 60. We'll see how it all unfolds.
We'll have more with Mark Leibovit when This Week in Money returns.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYVresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Mark Leibovit. Mark, are there correlations between astrology and the markets?
Well, I have so many friends that do it, I wouldn't want to disparage any of their work. So, some of the big name astrologers have been friends of mine for decades, and I've told the story before on the show when I was a floor trader on the Chicago Board Options Exchange many years ago. I ran into a financial astrologer who became a friend of mine and introduced me to many others that do the same thing. I was surprised that there were that many people that even did it. And when I first heard about it, I thought it was pretty funny until he made a prediction. When I remember one day we were trading, and I think, again, I may be repeating a story that I've told you before, but we were on the floor, and he was telling me at noon the market would change direction and you could, reverse your positions and make money. And exactly at noon, I think within 30 seconds, the market did exactly that. It had something to do with what he referred to as the nodes of the moon, NODES, nodes of the moon, and how that related to astrology. I know he was an astrologer. It sure worked. So that caught my attention, that somebody could be that accurate. And I'm not saying every call he made was accurate, but I've been in touch with so many of these astrologers over the years. And there's definitely a pattern there. It's like anything you can chart on this, and I've mentioned on these interviews before that I got influenced. There's a famous Canadian analyst, AMY.V, who out of Toronto, who was actually on the Louis Rukeyser show back in the 1970s, and he inspired me when he actually did an interview with Louis Rukeyser talking about the full moon and its connection to gold. And he didn't invite him back on the show. I guess people just feel like you start talking about astrology, you don't know what you're doing. Now, Ian wasn't just an astrologer. He was a technical analyst, a very good one. And a good friend of mine over the years. He passed away a few years ago, but he has been really good in terms. I think his letter was called Deliberations. I think that was the name of his newsletter. Very popular for many years. So he influenced me along with my friend on the floor, and I started doing my own studies about correlations of the lunar cycles and the stock market, and I found many significant ones. In fact, just recently, on September 1st, we had a full moon, and the market topped out, I believe, within a day of that full moon. Just to give you an example, of course, our forecast model was telling us to be careful by the end of August anyway. So that's just one aspect of it. But I have, contacts. I get all these newsletters, and they talk about all the, the various astrological patterns, how they affect the markets, and I read them and I look to see if there's any correlation with the work that I'm doing. And I think you have to keep an open mind because there's a lot out there. When you think about it, the moon controls the tides. Most of our body is made up of water. There's plenty of evidence that during full moons, emergency rooms tend to be more full than they are during other times. Maybe more so now with the COVID incident, but there's things out there, geocosmic forces, planetary forces that affect us, and we're not impervious to any of these. So I keep an open mind about what could be affecting us in our investment decisions. And there's solar flares out there. Studies have shown, the Foundation for the Study of Cycles has put out reports on that for many years, how they affect the markets. There's correlations to the solar flares and how they affect the way we react, the way we think. We are electromagnetic beings, and there are things that happen. So there's a lot of forces out there. So we have to be very attentive to it. We don't talk about this apparently on financial television. We supposedly look at only charts or only balance sheets, but there's a lot more to what happens in our day-to-day lives than just prices and volume. So I try to keep an open eye about it. And over the years, I found that it's been rewarding to pay attention to these events, and they have helped me make money in the market. So we are optimistic, and we try to follow them. Now, I don't know enough to make these predictions, but I would encourage those who want to open their minds to other ways of interpreting the market, read some of the astrological forecasts and see if they correlate with your own thinking.
Is trading more of an art or a science?
It is both. There's no question about it. You can think about like somebody who is a great piano player, and you and I could sit down at the keyboard, which I've done. I come from a musical family, and practice for hours and hours and just never have that knack that some people have. They just get into it, where they can just play that piano or play that guitar, and it's a natural. So it's almost as if they're born with that in their genes. Their DNA was programmed to be a musician. Well, the same thing with the stock market, or the same thing with any profession. I think you learn a trade, but some people just have a knack and predisposition to succeed in certain areas. So, like I say, I could practice piano all day, but I won't be a Liberace or any of the great pianists that I grew up with. And the same thing in the stock market. You see some just great traders. When I was on the floor of the exchange, guys that are just literally buy the lows, sell the highs all day, pick them, just have a sense for the rhythm of the markets. And I mention music only because some great market technicians have come from musical backgrounds, which is sort of interesting. The very famous Joe Granville, who called markets so dramatically back in the 1980s. If you went to one of his presentations, he would play piano, and he would do the scales up and down and play piano on the stage while he was talking about the stock market. And he came apparently from a musical background. And I can name some others as well that are very famous market analysts that come from a musical background. So I guess the pattern of notes, the rhythm of music, the rhythm of the market, the rhythm of the universe, the rhythm of the moon, the rhythm of the stars, everything fits.
Do you have any special trading tips you can share with us?
Buy low, sell high.
Thanks, Mark. We'll wrap up the interview now.
Try to buy, seriously, buy, when they kill them, when they come down and the news is bad, like we saw in March, or when you see an individual stock, even just recently, like, Intel, they took it down on a bad news story, a blue chip company like that. That's your opportunity, because my view over the years is they shake stocks to take them back up again, and that's just the nature of the beast. So when they come down big, look at the charts. More times than not, there's going to be an opportunity. And when they go up big on good news and everybody loves them, and you've got Jim Cramer on CNBC telling you how it's the greatest stock on the planet, and the stock is up and strong on heavy volume. When you look at the chart, it's like straight up. You'll know for sure that's a top. It's a time to get out. And if you're aggressive, even consider shorting the market. And over the years, you do best exiting when you see these huge spikes to the upside, and getting long when you see these big collapses to the downside. And they come all the time in individual stocks, less frequently in the overall market, but you see it every day in individual names, and this is what you have to pay attention to.
We're hearing at least some of the wildfires on the West Coast are being caused by arson. Could markets from agriculture to real estate be affected by these fires?
Oh, absolutely. I think it's obvious that the fires could affect. I remember recently, in the last couple of years, they had the fires in California, and it killed the marijuana industry that was growing in that part of California, and there were shortages of cannabis. That's just one extreme example. Sure, there's no question about it. And speaking of fires and climate, a lot of the cycle work that we're doing and studies that we're doing says that, there is risk of food shortages and other things coming up here, whether it's these fires, some other planetary forces, whether this, we're going to get, there's some studies indicating greater potential instances of volcanic activity and earthquakes in the next year or two, which could disrupt the climate around the world. So maybe the fires are the first sign of it. So, yeah, definitely these things have impacts, and right now I would be looking, with regard the how to protect oneself in case there are, food shortages too. Do you grow more of your own stuff? I've been looking into hydroponics and things like that, just as an insurance policy. God forbid there's, more impact on the environment and agriculture.
There seems to be a push for Marxism around the world. Is Marxism a market destroyer?
No question about that. No question about that. It doesn't work in China or Russia. And it's funny because supposedly it all started there. Russia gave up on it. China is probably as capitalistic as they could come. They're communists, but they're not Marxists. They want to make money. They're capitalists. Some of the wealthiest men in the world are Chinese, and I guess as long as you partner with the communist Chinese government and they're all making money together, they're all capitalists. Russia's the same way. That's all changed over there. So it's really funny that the West, U.S. and Canada have become more socialistic, and particularly here in the U.S., more talking of Marxism and socialism and so forth. It's already proven that these systems don't work. The two big proponents of it supposedly don't do it anymore, are more capitalistic than ever. So I think those who are enthralled with this idea need to study history a little bit. You can look at Venezuela, see what happened down there. It just doesn't work. It ends up to the end result is, a lot of suffering on the part of individuals, dictatorships, mismanagement of the economy, revolution, and ultimately it falls back into a capitalistic society. There has to be incentive. I remember, stories years ago when Israel was created that the kibbutz was such a great idea. It's communal living. Everybody donates their money. They work on the farm. It becomes like a socialistic, communist environment. And everybody donated stuff to that. And that system failed in Israel, which, is leading in other ways. But, many people that did that decided, gee, I have nothing to leave for my kids anymore. There's no inheritance. I gave everything to the kibbutz. It's a communal living situation. I donated all my assets and my Social Security, my time. And here at the end, what do I have to show for my life? So that system failed, even though the intent was everybody would benefit from, contributing together or donating all their money and not thinking of money as a goal. I think people need incentive. And the capitalist system does that, and over the decades we've seen that it does reward everybody. It creates innovation, and it moves the economy forward. I think without the capitalist system, the world would not progress.
I heard relatives from Israel describe kibbutzes as you have 10 people, 3 work really hard, 3 work, and the others just watch.
Okay, that's a good description. But I visited them, never participated in the kibbutz, but I'm just saying that's an example of what the regrets of those who got involved in it have told me, and I've read over the years that the intent was a good one, but in reality it doesn't work.
Are there any new and upcoming sectors you're keeping a close eye on?
Right now, there's so much stuff. All the ones that we mentioned before I still like. I'm just waiting for the markets to settle down here a little bit. Many of the U.S.-based marijuana companies, many have shown tremendous profit potential compared, unfortunately, to what we've seen in the Canadian names, which started out so strong and were the leaders for so long. So we're watching a whole bunch. We have a whole list. We have a few of those that we're holding some positions in that do all their business in the U.S., that have done a terrific job in setting up marketing facilities and sales. And I'm still a big proponent of the solar stocks. I think they got too far, too fast. They ran up vertically. We've been bullish on those now. It's got to be a year and a half to 2 years. But they're still well off the highs that they saw many, many years ago. So a pullback, a correction in that sector, I think is still, something worth paying attention to. And, those are sort of the two that I sort of focus on. And I guess if we do get more of a shakeout in the golds here, gold shares and the index, individual and the individual commodities themselves in the next few days or couple, 3 weeks, that'll provide a good trading opportunity, I think, into the end of the year.
Mark, can you remind people about your special offer again?
Sure. It's vrtrader.com, vrtrader.com. Any of the newsletters you see up on the screen when you get to the order page, and there's a little blank for a promo code. You enter the promo code 2020 half off, 2020 HALFOFF, and you get 50% off. Thank you.
Mark, thank you so much for being on This Week in Money.
Thank you. We covered a lot of territory there, Jim. Thank you so much.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. Now we'll dig deep into gold and silver with Ed Steer next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from beautiful Merritt, British Columbia. Welcome back to This Week in Money.
Well, hi, Jim. Good to be back, and good afternoon to you and to all your listeners.
And volatility for gold and silver has picked up. What are you seeing in the latest Commitment of Traders report for gold and silver?
Well, that just came out about an hour or so ago, and I just got off the phone talking to Ted Butler about it. And despite all the huffing and puffing, I think Ted said we were down to about $70 in gold for the reporting week, maybe $65, and about $2.50 in silver. There were very small changes in the Commitment of Traders report. There was some improvement in the commercial net short position, or a decrease in silver, but there was a surprising increase in the short position of the commercial traders in gold. But, all in all, considering the magnitudes of the engineered price declines during the reporting week, the report turned out to be pretty much a big nothing burger.
Could gold and silver be in correction mode after a big run-up?
Well, I'll tell you what. This correction, there's nothing real about this correction. The only reason we're going through this correction is because the big H short holders, and most likely J.P. Morgan, stepped into the market and wouldn't allow it to rally anymore. So, this price decline we've been witnessing for the last month is totally engineered, just like the price decline over the last week. There's nothing real about this market. It's totally manufactured, just like the Dow Jones and the NASDAQ and the U.S. dollar index. There are no free markets. And the gold market and precious metals market are exactly the same.
If gold and silver are correcting, are the gold and silver stocks likely to have a higher percentage drop than the metal?
I'll tell you what. it's been surprising. Certainly the precious metals have not done well in the last month, which is not surprising because considering the fact that the metals, the underlying metals are doing so poorly. But when you look on it over the overall, they are not having the significant drop they would normally have. Yes, they're down, but they're not down anywhere near the percentages that the precious metals have been forced to decline over the last month. So they're holding up very, very well under the circumstances.
Are gold and silver stocks likely in a long-term bull market?
Well, there's no question about it. I mean, this engineered price decline we're having right now is just a pause before we head higher from here. The precious metals are in a bull market, and the stocks are going to be in an even bigger bull market. And nothing is going to change in the short, medium, or long term. It's up, and away from here.
Have the big shorts been covering their silver shorts?
Well, in this week's Commitment of Traders report, they covered them a little bit. It was an insignificant amount, like 1,500 contracts, so like 2% or something like that of the short position. Their short position right now, for your listeners, totals about 50 for these 8 short traders, the big 8. Ted Butler says that the big 8 are short about $15 billion in unrealized and realized margin call losses as of the close of trading on Tuesday or today, and even today. And so their situation is virtually hopeless, and it didn't. This week's report only helped a bit. And those are the big 8 shorts in silver. And in gold, the big 8 actually increased their short position by a tiny bit during the reporting week. They've been stuck on the short side like this for a year now. And they've been, like I said, they've been huffing and puffing at the price. We've had engineered price declines left, right, and center, including the big one. And we had in, February and March, where gold was down, $200 and some dollars. Silver was down like 8 or 9 or 10 or something like that. And even that didn't help them. They're permanently stuck on the short side from a COMEX point of view. And at the moment, there's no way they've been able to cover the short positions. And this week's COT report showed that they made very little improvement.
We'll have more with Ed Steer when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ed Steer. Ed, is there still a physical shortage of silver?
Yes, there is. I took a look around some of the websites this week because I check on them all the time just to see what's going on. There is a silver shortage and a gold bullion shortage out there on a retail level, but I must say that it's not as bad as it was the last time we spoke. If you go to some of the more prominent websites, they do have product for sale. I don't know how much they got 1-ounce rounds and 10-ounce bars and 100-ounce bars. And they have some Maple Leafs and they have some Silver Eagles. So, is there a shortage out there? Yes, there is, but it's certainly not at what it was before. But if you want to buy a large amount of it, it's still hard to come by.
Earlier in the week, our correspondent Sean Broderick said solar in the U.S. is booming because it's become so much cheaper than it was a decade ago. Is that sucking up a lot of the silver demand?
Yeah, well, the silver is just solar panels are just one of many of the thousands of industrial uses for silver. There's no question that solar panels are using a large portion of that. The solar panel industry in the United States isn't growing as fast as it once was. And in China, most of the solar usage is overseas in the Far East, especially in China. And it's going to continue onwards and upwards at varying rates of speed. And there's no question about it. From where we were, let's say 15 years ago, a solar panel was a novelty. Now it's gone mainstream, and of course, over time, it's just sucking up more and more silver every year.
Is the U.S. dollar likely to strengthen while gold and silver correct?
Well, I just mentioned that, the Dow is artificially propped up, as is the NASDAQ, and precious metals are being actively suppressed in price. The U.S. dollar has an intrinsic value, and it's certainly far, far lower than it is today. It's some number, I have no idea what it is, but like everything else, the powers that be are keeping the dollar artificially elevated, because if it was allowed to trade freely, it would be at some value that's far, far smaller than it is today. So the dollar, we could see a dollar rally here, either short covering, because there's massive shorting in the U.S. dollar index right now by foreign entities, and everybody and his dog is short the dollar in the COMEX. So could we see a short squeeze here? Absolutely, but it remains to be seen whether that'll affect the price of gold and silver or not, because, as most people know, the dollar can rise and precious metals can rise at the same time. It's not unheard of.
What's happening in physical versus paper gold and silver? In other words, I would think what you can hold in your hands versus paper certificates promising to give you gold or silver.
Okay, well, the thing is that the price is set. The price of the physical metal is set in the paper market. In other words, it is not set on base of supply and demand. The price that the miners are forced to accept is a paper derivative price that's manufactured on the COMEX. So right now, there's a serious shortage in retail precious metal, and the situation in the industrial section is very, very tight as well. And so as far as the physical aspect goes, there's not much of it around, but it's not being reflected in the price because the price is set mainly by the big H short holders in the COMEX futures market. It's the tail wagging the dog scenario.
How are the HUI and XAU indexes doing?
Well, they, I'll tell you what, over the last year, they have just been terrible. They have not kept up with the increase in the prices of gold and silver at all. Silver is up far, far more than gold on a percentage basis this year, but the gold stocks are still outperforming the silver equities. It's just a mad world out there as far as as stocks go, but sooner or later that will correct itself. But for all investors, including myself and probably yourself as well, it's been very frustrating to watch this unfold. They should be doing better, but they're not.
How is the gold-silver ratio looking?
Well, from its high back, was it late February, early March, where it was around 127 to 1. It's as of yesterday's close, it was 72.5 to 1. So we've had a 55 point drop in the gold-silver ratio over the last 6 months. And that's mainly because the silver has gone up so much in price, and there's no doubt that ratio will continue to plunge over time. Where it ends up, I don't know. There's people out there saying it's going down to 15 to 1. But, if they allow silver and gold to trade freely, it's anybody's guess where it's going to go. But I can tell you, when we do finally get to some sort of free market pricing in the precious metals, it's going to be far, far, far lower than it is today.
Are gold and silver tough markets to time?
Yeah. Well, if you know what the big 8 traders and JP Morgan are going to be doing in the COMEX futures market, then it's not tough to time at all. But I can tell you right now that, for me, and I can't speak for, everybody, all the investors out there, but I'm a buy and hold kind of guy. I'll buy something like I've held. To give you an example, Pan American Silver or First Majestic Silver or Silver Standard or Wheaton Precious Metals. I've held these stocks in my portfolio for more than 15 years, so I bought them when they were really, really cheap. And I'm just a buy and hold kind of guy, and I admire those people that are very good at going in and day trading these things, but they're not for most people. And if you get in there and try to trade this thing on a daily basis, you're going to get yourself killed if you got no experience. So they're very, very tough to time, and for most people, they just buy the stocks and hold them. And that in this pricing environment where we could be going sharply higher at any time, that's the smart way to do it right now.
One of the questions our correspondent Bob Hoy received was, can we expect a dip in the market good enough to make some gold miners a reasonable or more affordable purchase?
Well, like I said before, the silver stocks have underperformed the rise in silver price. It's been terrible. Any of the silver miners out there, you just pick anyone. I don't care whether it's $1 stock or whether it's a $60 stock. They are very, very undervalued right now. And as far as I'm concerned, everything's on sale in the silver sector right now as far as the miners go. And this is a buying opportunity that should not be passed up, in my opinion.
How can people find out more about your newsletter?
Just Google my name, Ed Steer, S-T-E-E-R, or they can go to Ed Steer's Gold and Silver Digest on the internet. They can click on my website, and there's a free sample page, and they can read what I have to offer. And if they think it's worthwhile, they can sign up, and the freight is $100 US per year, which is about 132 Canadian right now. And for that, they get about 250 to 260 columns a year. So it's pretty dirt cheap per column.
Ed, thank you so much for being on This Week in Money.
My pleasure, Jim.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He was speaking to us from Merritt, British Columbia. My conversation with Ed took place Friday afternoon. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Mark Leibovit, and Ed Steer. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update with American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, always good to be on the show.
How does Elon Musk's search for so-called clean minerals for his batteries affect recycling?
Well, I will say one thing for his push for nickel, carbon-free nickel, carbon production-free nickel, and that's done a tremendous amount for some of the companies that have nickel deposits out there, talking about going into production, and of course it's a high-cost endeavor, and but their stocks have doubled and tripled, because of what Elon had to say. So that's good for the market, and I think that if they're looking for carbon-free nickel, they should look at us. I mean, we can produce recycled material, even though there's reports out there that there's not enough of it. But to be very honest with you, there's quite a slug of scraps out there that we would start our process with and produce carbon-free nickel for sure, especially on 811 batteries, meaning 8 parts nickel, 1 part cobalt, and 1 part manganese. So, it's a great topic, and certainly it's creating a lot of speculation in the field of producing these materials. So I for one, will have included a couple of articles in this on our podcast, and I for one, certainly toast the what Elon has to say, and but I think this is going to be great for recycling.
certainly J.B. Strobel's announcement of recycling in Nevada and using high heat is sparked a big interest in recycling. And we're getting a lot more calls now on potential financing and that sort of thing that will help us along the way. And, it's JV's endeavors are, like I say, we needed somebody big. I've been saying this in my podcast for some time, to spark interest in the recycling field. And JB's has a stellar reputation out there, being part of Tesla, co-founder of Tesla, and now starting up with a recycling plant in Nevada with redwood materials. So that's the spark that we needed. And if I can remember the spark we needed when we were looking for molybdenum, back when we had about a $10 million market cap, and within a year and a half we had a $300 million market cap. And I can hope that this is going to happen with our recycling efforts. Certainly we've got the patents held down solid. We've optimized the plant. We will do further optimization on that. The pre-leach came out at a high rate, and we had talked about that last week. So, it's an exciting arena that we're in. And, you have to say, for one thing for certain, is that, there's a lot more publications on it. The last, podcast that Zarko did, got some interesting, comments on it from interesting people. And, we just move on. And, now I think we're in a bull market, and, if you're looking at the stock, trading higher, better volumes. So, it's only a matter of time till those volumes double and triple, and, at that time we'll start to see, hopefully gaps in the price of the stock. And, so, it's a happy week for me. It's been busy, and we've got had a lot of more interest in looking at short-term financing and perhaps working into long-term financing from some of the funds and brokerage firms out of the east, being in the Toronto area and in New York. So it's starting to feel like we're really making some traction here, and I couldn't be happier about that, Jim. Now, some of our titles this week are going to be, we'll put up the YouTube interview with Zarko, and the mining.com came out with a lithium-ion battery waste may widen recycling market report, which is another thing that's needed. They're claiming that 8 mines the size of Gibraltar's Katanga will have to be into production to meet that battery demand 10 years out. So, and also, the plant in Reno, the Tesla plant, Panasonic plant, is going to add another line on there, so they're increasing that. And I have to say that Elon's going wild with all the battery manufacturing plants that he's putting in around the world, like China and Germany and those areas. It's and another one in the U.S. He foresees a big demand for batteries for EV cars, and I think he's on the money. And I follow everything he does, so I can't but agree with him. I mean, things are going to get much better. So, we're in the right field. It's been a drag up until now, but we need other people in the field. I know people get concerned about wow, somebody else is going to go recycling, they're going to get all the material. Not going to happen. There's 10 years from now, there's going to be could be up to 100 recyclers out there, and everybody's going to be busy, and the one that has the best in the West recycling process will be the busiest. So I'm hoping that's where we fit in. But yeah, it's exciting, Jim, and you'll hear more from us next week. So that's the short version of my podcast today.
Larry, for people new to American Manganese, where are you traded and where can they get more information about the company?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded on the U.S. Exchange under the symbol AMYZF. We're traded in Germany under the symbol 2AM or in Frankfurt. And you can get all the information, do all your due diligence by going to our site at AmericanManganeseInc.com. If you want to contact the company, you can email me at LREAUGH@AMYMN.com, or you can phone at 778-574-4444. And I wish everybody a great weekend.
Larry, thank you so much for the update.
You're welcome.
I'm Jim Goddard. I've been speaking with Larry Reaugh, CEO and President of American Manganese. Our conversation took place on September 11th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.